situations where there are non-economic sellers, be it of a small spin-off or a bankrupt security or a dividend-paying security that slashed its dividend. And those are great because you're not dealing with rational economic sellers, you're dealing with forced sellers. Someone who only owns companies above 500 million can't own a tiny small spin that's with 100 million market cap. Someone who needs to have an income-producing portfolio has to sell a share no matter what if they eliminate the dividend. And so that's one kind of area, these kind of forced or non-economic sellers. The other area is where there is some problem or something that's being focused on that maybe is being overdone or not as relevant, and say there's a terrible division in a business that is perhaps losing a lot of money. Sometimes that can be attributed too much value, and shareholders might overlook another division that's very profitable, or the rest of the business that's very strong, or there is something, some kind of hidden asset, be it a patent portfolio or real estate holdings or something like that may not be widely known and maybe obscured. So those are some kind of situations. And then, frankly, there are other times when, I'd say most of the time, if you can't figure out why it is, it goes into that, Buffett's too hard box. Unless you can get a really good idea of perhaps why the security is mispriced, then you may well be missing something. I think to me, there's very few things that are scarier than something that is extremely optically cheap without any understanding of, if you don't understand why it's trading where it is.